My portfolio is closing in on £18,000. It's sitting at around £17,900. In this video, I'm going to take you through both of my portfolios. One is in Freetrade and one is in Trading 212. I'm going to take you through some of the buys that I've made this month, some of the sells that I've made this month, and a bit of the composition change that I've done throughout the month. A lot of things have happened in the month of July, like tech stocks took a massive dip and they're actually creeping their way back up a little bit. There's been a lot of changes in the UK. There was an interest rate cut from the Bank of England. I'm going to talk about how that's affecting my stock portfolio. Then I'm going to talk to you about what I'm going to do with my portfolio over the next few months, taking us to the end of 2024. And I'm also going to show you the dividends that I received. Let's get into the video. So let's first take a look at the portfolio on the Freetrade app. So this is the portfolio on Freetrade. It's about £12,500. Before I start, I'm actually going to say no face cam because I'm using my iPhone to record my face and I can't do that at the same time as screen recording unless I do it on like TikTok or something, but I don't know how that works. Anyway, £12,500. Realty income is my biggest position in this portfolio. Overall, VWRL is biggest because I have 13 shares in Freetrade and I have 13 shares in Trading 212. So that takes it to about £2,600. But realty income is my biggest single position. It's actually had a really good month. Just going to take you through it, up 8%. Now, this is literally because interest rates should have come down and there's now more hype around interest rates coming down. This company has a lot of debt. Obviously, it's like real estate debt, so it's not terrible debt. Like they don't have like ridiculous, they have good rates. But obviously, the longer high rates go on, the less money this company is going to make. So interest rates coming down means that they're going to make more profit. So they can redo all of their mortgages or redo all of their loans and they can make more money. So that's good news for them. They've had a really good month. I'm back in the green for the first time in, well, realistically, probably for the first time since like the start of the year, really. VWRL, like I said, I've got 13 shares. There's a bit of a scare around the whole yen carry trade, which affected all the tech stocks, all the high return stocks. Same with sort of Microsoft, they've had a bad month, down 8%. Still in the green by quite a bit, but that's because I bought at a ridiculously good time, a very lucky time. And that's the same with Google. So, they had a bad month, and with Amazon as well. Amazon and Microsoft were hit at the same time. But Google also took another hit recently, which was to do with their lawsuit. So they're now considered an illegal monopoly. That $20 billion that they've been giving to Apple every single year to do with keeping them as the default on their iPhones and all of their systems, they now can't do that, which has affected the stock a little bit. But realistically, it's probably a good time to buy in. But I do think that they're still a solid company. Eventually, like regulation will probably catch up to them. Pepsi have had a good month. It's the same for a lot of dividend paying companies in the US. With the thought that interest rates are coming down, it's more likely that people are going to be investing in these dividend paying companies because it provides a better yield. And that's sort of what happens. Interest rates come down. Companies that pay dividends do a bit better because of the yield. But generally, I've had quite a good month, I have to say. So if we have a look at this month, I'm up £132, which isn't a lot. But when we look at the spikes here, we can see I've had a big dip and then we've had a bit of a recovery. I think this is August, to be honest with you. This might be August, actually. Yeah, that was an August dip. So if I recorded this on the 1st of August, I probably would have been fine. But we're sort of back up above where we were at the 1st of August, roughly. But if I have a look over the last 3 months, I'm up £100. Over the last 6 months, I'm up £1,200, which is quite a bit. That big drop is me moving some of my portfolio over to Trading 212. But that percentage, that pound up is actually just pure gains. It's not to do with me putting money in or taking money out. You can see like I was up about 15,000. I was at 15,000 and I'm at 12,000, but I'm still up £1,200. In the last year, up £2,150. And since the start of my portfolio, up £2,180. I actually nearly sold out of my Lloyd stock because of interest rates. So when they cut interest rates, there was this big sell-off, but it seems to have cooled off a little bit recently. I don't know if I'm recording this video right now, if this stock tanks because of interest rates again, because there's now it's more likely that interest rates are going to be cut again. And I think that's kind of bad for banks in a way. Initially it is, especially when interest rates are coming down. I think that's when banks sort of suffer a little bit. But Lloyds have done quite well off of high interest rates. They've had quite a good year. They've had quite a good time since interest rates came up. Like, it's not great, obviously, but they've had a decent time. Is it time to sell out of bank stocks? I'm not sure. I'm genuinely considering selling all of my UK stocks. But some of them are doing ridiculously well. Like Tesco is up 37% in the last year. In the last 6 months, up 20%. Like, they're going crazy. SSE has had a bit of a shaky 3 months. Like they dumped a little bit. Like from here from about May. They dumped, but I quite like S&C. I've been bullish on S&C since my portfolio started. And then Unilever is done okay. It's not done brilliant. Over the last 6 months, up to 17%. Pays a good dividend. I think they'll do well when interest rates come down. It's now my biggest UK position because GSK took a little bit of a dump over their lawsuits, but they've actually had a bit of a recovery when the interest rate news came out. Again, they pay a good dividend. Anyway, that's the portfolio. I'll show you the dividends I got. So I got GSK dividend, £11.25, Realty Income dividend of £7.61. And I actually added a share of Realty Income because I had a bit of money in the portfolio. So I just put another share into Realty Income for £41. That was on the 9th of July. Was that a good buy? Let's have a look. 9th of July. 9th of July. So 9th of July was here. And then that run up there. So I've gained from $52 to $60. So I've gained $8 just on that singular share. So that was a good buy, apparently. Let's move over to the portfolio on Trading 212. So Trading 212, my portfolio here has just been absolutely shite. Like, it hasn't been doing great, honestly. I bought in a bad time, a very turbulent time. This is where I'm going to be moving all of my portfolio over to. It's just that I can't do it right now. They're not allowing me to. They said that by the end of September, I'll be able to move all of my portfolio over. They said it was the end of August. They said it was the end of July. They said it was the end of June. They keep pushing it back. And I've sent them a few messages saying, oh, can I move my portfolio over yet? Blah, 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 blah. Just not let me do it just yet. Hopefully by the end of September, I'll have £20,000 in Trading 202. That'll be nice. Anyway, so this month was actually, July was quite big for me actually for this portfolio. So I sold out of Nvidia. I sold out before their massive sell-off. I sold Nvidia on the 19th of July. They were coming down a little bit. I sold here, they went up, and then they've had a bit of a sell-off. So I made a few pounds off of them. Like, I made like 10%. It wasn't great. It wasn't a great trade. I was just trying to get on the train. I realized that it was kind of over, sold out before it went red. That's basically it. It was a bad choice to buy in anyway, but I made like 50 quid. I think I made like 50 quid. I can't remember. So I sold out my position in the iShares MSCI India ETF, mainly because I bought in without thinking about it. So when I bought into it, I didn't look at the expense ratio. I just instantly bought. I didn't really think about it. I did a bit more research and I realized it was 0.65, which is quite a lot. Not a great buy. So I sold out of that. I was in the green, so I didn't make a loss on that trade, but I move that money into the Franklin FTSE India ETF. If we go and have a look at the instrument details down here, you go to key information document. If we come down here to the charges, the ongoing charges are 0.19%. So this is less than a third of the iShares MSCI India ETF. If it's tracking the same index, and it is, I've looked at the holdings. If it's tracking the same index and you're being charged at 0.65% for one and you're being charged at 0.19% for the other, over 2, 5, 10, 20 years, you're going to be paying out 3 times the amount. And that stacks up. That will stack up. Like, you'll be paying out so much more in investment fees and you'll make so much less money just because of those investment fees. And you can look at the charts. The charts will pretty much be identical, but the charts don't show the fees. The charts will not show your actual performance. My next position is Rolls-Royce. I haven't really made any changes to this position. At the start of July, they were at 450. At the end of July, they were at 449. So they were pretty flat in July. They're up and down, very much down, but they've had a bit of a spike since then, at the start of August. So they've had a bit of a bounce back up. So I'm up 10% now. And then I have my 13 shares in VWRL. The other 13 shares, so I've got 13 shares here and I've got 13 shares in Freetrade. This one here, I've just been adding to this position, 1, 2, 3 shares every single month. I wanted it to be my biggest position, and realistically, because of what's been happening in the stock market, we were at all-time highs and then there was a big sell-off. I didn't buy in when there was a big sell-off into these other companies. I was just buying into VWRL. I will be opening up a position probably in like an S&P 500 tracker, but not yet. I do still feel like there's going to be a little bit of a sell-off in the market again. I still feel like towards the end of the year, I don't feel very confident in the market. I feel like the US feels like they're going into a recession, and there's a high likelihood of that. Usually when that news comes out, there is a little bit of a hit on the stock market because people get scared. But in reality, it's not going to make too much of a difference to the stock market because these big companies that are running the stock market aren't having too many issues. There was that supply chain issue for the big tech companies to do with chips. Like Nvidia had to send back a load of their chips or something because there was some design issues which caused some supply chain issues or the companies buying these chips, which is mainly big tech. And that's why there was a bit of a sell-off as well there. But I don't see there's going to be too much of an issue until they run into that. They've overbought into AI, basically. That's the only thing I'm really worried about. But I think with interest rates coming down, money will become cheaper, and they'll start to not really be thinking about where they're spending their money. They're just going to keep spending money, and the stock prices will just continue to go up because that's just what happens. Anyway, that was a bit of a ramble. My final position in this portfolio is Visa. Now, Visa is one of my bigger positions now. It's at £1,200. I keep buying into the company because I believe this is a brilliant company. They've had a bit of a sell-off since February, and that's why I keep buying into the company, because I think that I'm buying in at good prices. And I think, if we go into a recession, probably good for Visa. They're going to make more money from people not being able to pay debt. They're going to make a load of money from that. And then when the economy is good, they're going to make a load of money. So whatever happens, I'm just going to continue buying into Visa. Anyway, that's my portfolio in Trading 212. You can see £5,400 account value, £3,785 invested. I've got £556 reserved for orders. And then I've got free funds of about £1,000. So now I'm going to take you through my investing spreadsheet. So this is the main dashboard on the investing spreadsheet. So you can see here on the top right, I've got a few metrics. The first one shows you my cash holding. The second one shows you my portfolio value. So that's all of the money invested in the stock market. And then it gives you the total value here, which is at around £17,900. My total return is about 16%, just over 16%. My dividends received are £436 in total. That's since the beginning of the portfolio. It says I've received 0 dividends in the last 30 days because I'm making this in the middle of August. But I will take you through some of the dividends I did receive in July. My actual yield on cost is about 3%. And my total return, which is dividends and market return, is about £2,400. You can see that easily in this graph here. I've got my invested value, which is the money I've put into the portfolio. I've got my market gain or loss, which is at around £1,950. I've got my market value, which is around £16,300. And then my cash holding, which is £1,600, like I said, and then the portfolio value. This blue pie chart up here shows you my split between UK, US, and ETFs. My ETF position is slowly creeping up. I think last month it was around 19%. Now it's closing in on 20%. If we take a look at the pie chart below that, you can see that ETFs are actually my largest position in the portfolio, sitting at around 20%. And then my second largest sector is actually consumer defensive at 19%. And if we look at some of the positions in the portfolio, I have VWRL, which is the All World ETF. It's around 16%. My other ETF, which is the Franklin Indian ETF, around 3%, which make up the total of about 19 to 20%. And then my other big positions are Realty Income at 13%. We have Microsoft at 8%. Visa at 8%, Unilever at 8%, and then some other smaller positions like GSK at 7%, Google at 6%, and SSE at 6%. This purple graph here actually shows the percentage gain or loss for each of my positions. Most of my positions are actually in the green, although purple here. And some of my stocks like Google, Amazon, and Microsoft are actually up around 50 to 60%. And we have a few other stocks like GSK, Lloyds, Unilever, and Tesco that I've held in my portfolio for around 2 to 3 years, and they're actually giving me an okay return around 15 to 20% for each of them. So if we now take a look at the dividend dashboard, you can see in my first year of dividends, I received £128, and my second year of dividends, which is from September 2023 to today, which is July 2024, I've received £307, even with a few more months to go in my second year. If we take a look at my dividends year on year as well, so calendar year, in 2022, I received £15 in dividends. In 2023, I received £216 in dividends. And in 2024, I've so far received £204.49. And we've still got 5 months to go. If we take a look at this pie chart over here, it shows the dividends received per sector, which just shows you that my 2 biggest sectors are consumer defensive and real estate. So this tab shows the transactions month on month per stock. So you can see in July, I actually sold more stocks than I actually bought. I sold more in value than I did buy. I actually netted out minus £26. This is because I sold out of Nvidia and I sold out of my iShares India ETF, and I switched that for the Franklin India ETF. So most of the time I'm actually holding cash in the account. So over the last 3 months, I've actually been building up a little bit of a cash position. As you can see in May, I actually dumped about £2,500 into stocks. This tab is the daily dividend calendar. So you see what dividends I received per day. On the 11th of July, I received £11.25. On the 15th of July, I received £7.61. And this tab here is the dividends per month per stock. So you can see, GSK paid me £11.25 and Realty Income paid me £7.61. So in July, I only received £18.86 in dividends, But if you look at June, I received £58.46, which was my biggest month. So that is the investing dashboard. Let me just talk about the goals. So I'm closing in on £18,000, and that is really close to my £20,000 portfolio goal. Obviously, I do have a bit of a cash holding, so not all of it is invested. But before I hit the end of the year, which is the goal for the £20,000 portfolio, I will hit £20,000 invested in the portfolio, and my portfolio will have a value of over £20,000 by the end of the year. I do have a goal of £100 a month in dividends, but realistically, that's going to take longer than I wanted to initially, simply because I'm switching away from investing in purely dividend-paying companies to switching up a little bit to having ETFs, having tech companies or high-growth companies, as well as dividend-paying companies, to have a very diversified portfolio. The next goal is 10 years of investing. And obviously, that's going to take 10 years to hit that goal, so it's quite a long-term goal. But I am at 3 years now, so we are about 30% of the way there. And then my other goal is to make an ETF a core position of the portfolio. And the goal is currently at 25%, but I'm closing in on that goal already. I'm nearly at 20% for ETFs in the portfolio. So when I do hit that 25%, I'll probably end up changing this to be about 50% of the portfolio. The goal is to increase the amount of money I actually hold in ETFs in the portfolio to bring down the risk and actually just to make it a little bit safer. So I'm not having to worry about what all my companies are doing. Also just to increase the diversification in the portfolio. Thank you for watching this far into the video. If you enjoyed the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, then please give me a comment below and I'll give you a reply.